The broadcast is now starting. All attendees are in listen-only mode.
Hi, Sandy Vicani with Insurance Agency Marketing. Really do appreciate everyone taking time out of their long holiday week here to spend some time learning more about single premium life with EquiTrust and IMES. Just so greatly appreciate it. There's a few slides that I'm going to go over before I hand it over to Jason Goodrich with EquiTrust, and let's get these slides going, and so we can hear more about the great products that EquiTrust has to offer. For any agent of ours that refers a new agent to us, when that referred agent gets contracted with us, here at IMES, we just want to say thank you. And how we do that is by sending you a $50 check when that referred agent gets contracted with us. When that same agent places business with us, whether it's over on the life or annuity side, MedSup, long-term care, combination thereof, we continue to say thank you by giving you 20 basis points on each piece of placed business from that point on. So as long as that referred agent continues to place business, IMES will give you a check for 20 basis points on that piece of placed business. That does not come out of your commission. It doesn't come out of their commission. This comes from IMES, again, as a thank you for entrusting us with that referral. We also, for all of our agents, set up a marketing reimbursement account. And we find this really important because we know how expensive it is for you agents out there to run your companies and your agencies. And so for every $100,000 of placed business, again, life, annuity, MedSup, long-term care, combination thereof, we will put $100 in your marketing reimbursement account. You can use that marketing reimbursement account to pay office expenses. So if you have a seminar, you did a website, newsletters, you needed a new computer, whatever the case may be, send in that invoice. We will pay up to 50% of that invoice or what's in that marketing reimbursement account. We also have for brand new agents something called a new producer builder. And so in your first 6 months, once you get contracted with us and start placing business, there's different levels that you can qualify for. If you place $100,000 of, again, life, MedSup, annuity, MedSup, life, annuity, long-term care, combination thereof, in your first 6 months, we will give you a $750 cash bonus or a 2-year producer website. If you think you're going to hold off because you'll place $300,000 of business with us in your first 6 months, you can choose a $1,500 gift card. You can choose a $2,000 marketing reimbursement, or you can choose Social Security program and a 3,000-piece mailing. If you think you'd like to hold off because you're just going to go gangbusters here and place $500,000 of, again, life, annuity, MedSup, long-term care, combination thereof, you can choose a 4,000-piece mailing and seminar coaching with a top producer of ours, Dave Pimper. You can choose a 5,000-piece mailing and seminar coaching with another great top producer of ours, Matt Gill. Or you can choose my favorite, my favorite, is the Ritz-Carlton Travel Rewards Getaway, where you actually get to plan your own travel package. So as you can see, again, first 6 months of being a new agent with us doesn't come out of your commission. This is, again, just a thank you for signing up and placing your business with IMES. We also have a very strong back office support. So we know that a lot of you don't have a brick and mortar building where you have a host of admin help. So what we want to do is help you work smarter and not harder. And how we do that is helping you with case design assistance, whether you're calling us up saying, gosh, I have $100,000. This client doesn't need income. I'm not sure where we need to do or where we need to put the money. Can you help me? We'll run quotes. We'll send out forms. We follow your case from submission to commission. So what that means is when you submit that application, we scrub that app for you. send it to the carrier that day, and then we literally touch that app every 3 days. So every 3 days, we're looking at that application to make sure it's staying on course to get placed and paid as soon as possible. We also have a strong marketing department, and in our creative marketing department, if you have a logo or a website that just is a little tired looking or needs refreshed, we can help do that for you, whether you, again, have a website or you don't have a website, need help with flyers, postcard, online newsletters, even social media consulting. Really big right now is advertising on Facebook. It does great, and if you're not comfortable with Facebook, not sure what you need to do, or even just need to set up a Facebook for your business, our creative marketing team can help you do that. So please keep that in mind. Again, when you start placing business with us, you can use that marketing reimbursement money to help pay for any of these services. I suggest that you contact Andrew or Jacob here in our creative team, our creative department, and let them help you design those business cards, logos, or any type of website. We also do have a strong website of our own, and that is www.iamsinc.com. And on that website, when you give us a call and ask for a quote, this is exactly where we go. We go right to this website. You're able to run quotes. You can pull forms. You can look at current industry links and news. If you're interested in what the top MIGA is, what the top income rider annuity is, you can pull that right from our website. It is a great source of information. We have a training library. So if you ever want to register or find out what our next webinar is, you register right there from our website. If you missed a webinar, we keep all of our webinars recorded on our website, so you can pull up the recorded webinars right there. It'll direct you to our YouTube channel, and you can pull whatever webinar that you may be interested in. So if you're not already registered for our website at www.iamsinc.com, can't strongly enough suggest that you get registered and kind of take a look at what we have to offer. We also started at IAMS Wealth Management when that DOL ruling came out. So what I'm going to do is put out a poll question, and by answering yes to this question, it's just asking for additional information. So when the DOL ruling came out, we just thought, how can we help our agents keep business in the door with them so they don't walk through the door and say they're not able to offer a specific product or area of expertise. And so what we did is we started an IAMS Wealth Management, and how we did that, or why we did that, is again to make sure that we increase your revenue. You're now able to offer a full range of products and services, and you are viewed differently by your clients. You're now viewed as a fiduciary. With that DOL ruling and the delay, and then the new DOL ruling and rules, it's so very important to stay on top of that. I know it can get confusing. And so by checking yes, just means that you're interested in finding out what the current rule is, how it affects you, if you need to continue with that PT 8424, what do you need to do as an agent? So if you can check yes on that, we'll get in contact with you and let you know if there's any additional things that you need to do. We also have a Life and Annuity Academy. This I'm just so excited about. I'm putting that out as a poll question as well. Again, checking yes just means that you're interested in finding out additional information. This is industry recognized. It's an all-expense paid trip, so we cover your airfare, lodging, meals, all that great stuff. And it is 2 days of really great training. And what we do is we have producers all over the United States fly in, and we go over different sales ideas and strategies. We go over indexed annuities and exactly what is an indexed annuity, when's the best time to use them, when is a great time to use that income rider. We go over different threats and trends in the industry and how that affects you. Seminar systems, whether you're looking to do a small seminar in a library, which we have a lot of success at with cookies and coffee, or whether you're looking to do a more extensive seminar, whether it's a sit-down dinner or a client appreciation, we go over that. Case marketing and management, single premium life, and what a great way for wealth transfer and also to cover those nursing care, home health care benefits. We go over creative advertising, software tools. We choose between 35 and 40 agents. We have close to 1,000 register. Our next academy will be early to mid-September. So again, I can't stress enough, by checking yes, you're just asking for additional information. We have these about 3 times a year is all. So if you check yes, we'll get you that information out. In addition to the great trips that all the different carriers offer, here at IMES we also offer an incentive for you and a guest. That's just an outstanding trip each year. So next year, August 25th through the 29th, you and a guest are able to go to the Ritz-Carlton in Naples, Florida. We have long qualification periods. We started that January of this year, and that goes all the way through June 30th of next year. Only way you're able to get invited for this is to place business with us, and you are eligible with a combination of annuity premium of $3 million, MedSup premium of 1.5. You have single premium life at 2.25. Life target premium, you can do $250,000 or you can do $600,000 in long-term care premium. Again, this is a trip in addition to all the other incentives that are offered through IMES and, of course, outside of IMES with different carrier trips, August 25th through the 29th through at Naples, Florida. So what I'm going to do now is change this over to Jason Goodrich. He and EquiTrust are such a great friend of IMES. They can't speak enough about the quality of EquiTrust, their products, and Jason himself. So Jason, if you'd like to take that over.
Thank you, Sandy. I appreciate it. Good morning, everyone. As Sandy said, my name is Jason Goodrich, and I'm one of the national account managers with EquiTrust Life Insurance Company. First off, I'd just like to thank everyone for taking time away from your busy schedules to join me this morning for an overview of 2 exciting and still brand new single premium life products from EquiTrust. I know this is a very busy time of year, especially with it being a holiday week, and I don't want to take up too much of your morning, so I'll try to keep the presentation to around 20 minutes, 25 minutes, somewhere along those lines, and cover things at a fairly high level. But however, as we go through the presentation, please write down any questions you may have. Then at the end of the presentation, I'll leave some time to answer any questions anybody has. What I'm going to be covering today is the Secure SuiteLife and the Growth SuiteLife single premium life products, which we just rolled out a few weeks ago. As you may know, EquiTrust has been a leader in the single premium life market for about 8 years now. And I strongly believe that with these new products, we're going to continue that trend and be an industry leader in single premium life insurance. Lastly, let me thank Sandy, let me thank Mark, Steve, all the great folks over at Insurance Agency Marketing. They have been a top marketing organization with EquiTrust for both life and annuities for many, many years, actually since the very beginning of EquiTrust. And we really appreciate their support and long-term partnership. With that, let's go ahead and get started here. Okay, to start with, what I want to do is maybe just give a quick little summary of the 2 products, and then I'll get into a little more depth as we go through it. As I mentioned, there's a Secure SuiteLife and the Growth SuiteLife. They're kind of designed for, a little bit different client, each of them. The Secure SuiteLife is really built on guarantees, and it's really designed for an older client, maybe an age 60 to 85-year-old client. And like I said, it's all about guarantees. So it has a guaranteed death benefit, has guaranteed cash values, has a return of premium we'll talk about that's guaranteed, has guaranteed living benefits to go along with strong caps and rates, and an 8% commission. So really build on somebody that's looking for guarantees in a single premium life product. The Growth Suite Life is a little bit different. That it's designed, it works well for senior clients too, but it's also designed for younger clients. So I think when you look at kind of the sweet spot on that, it's more of a 45 to 70. Okay, where the Secure 60 to 85, the Growth is more of a 45 to 70 product, and it's because it does not have the same guarantees as a Secure product. But in exchange for that, what the client's going to get is really high face amounts and death benefits, really strong caps and rates for growth potential. Because of the high face amounts, it's going to have really strong living benefits, and still does have liquidity with free withdrawals, loans, things like that. So it's really more of a longer-term product designed for potential as well as high face amounts, where the Secure product is really for guarantees. And we'll get into more of that, but I just want to give a kind of a quick summary to start so you know kind of the path we're going down here. Okay, first off, we are running a commission special right now. We just extended that actually, so it's running until the end of September now. And you can see on the screen there what it is on each case of between $25,000 and $49,999, we'll pay you $250. If the premium's between $50,000 and $99,999, we'll pay you $500. And for each case of $100,000 or more, excuse me, we'll pay you $1,000. There's no limit on this. In many cases, you write during that time, we will pay on, but we'll only pay one time per client, right? So if you wrote 2 cases on the exact same client, you'd only get paid one time. Okay, let's talk a little bit about the positioning, and then we'll get into the underwriting a little bit. Really, there's 2 positionings of the EquiTrust single premium life products. The first, and I'd say probably where we see 55 to 60% of the money, is wealth transfer, right? So those folks that have some money sitting somewhere that they just like to leave to their kids, their grandkids, charity, church, what have you. Quick example of how something like this can work for wealth transfer. A 50-year-old puts some money into this, they immediately have a death benefit of 155, right? So that 50,000 triples right away. Obviously, that's great for a tax-free wealth transfer. The other way position that we see a lot of business is really for those folks that are looking to address the concern for a chronic illness, nursing home, something along those lines, and maybe they don't currently have adequate long-term care coverage. It can work very good for that too, and we'll get into that as well. Same example, $50,000 is going to leave them over $155,000 to help pay for home health care or nursing care. So it's a great alternative to that on a simplified issue chassis. The third position, which I don't have a slide on, is cash value growth. One of the products we're going to talk about has really strong cash value growth in addition to strong death benefit and strong living benefits. I like to talk about this too before I get into the products, and that's the source of funds, kind of where the money comes from. On the annuity side, you know, we see about 70% of our business probably is replacement business, right? So a life insurance or an annuity, you know, is just being replaced. That is not the case with a single premium life insurance. About 90% of the funds that come into us for these products is coming from some sort of bank account, CD, or money market account, typically a CD or some sort of liquid account. Money a client has sitting in a bank account that they don't need, they like the security of having it there. These products can be a good alternative for that, and we'll talk about that. And as I said, that's about 90% of the funds we get. So if you have clients that you know that have some money sitting in a bank account that they don't need, but they haven't wanted to tie it up in an annuity or something like that, these products could be a good alternative for them. We do see some annuities. So if a client has an old annuity where they don't need the money, this could be a good option for them. And then also life insurance. So maybe they have an old life insurance policy that's, you know, not performing very well, it's going to lapse. They can take the cash value they have in 1035 exchange it over to one of these and get a paid up policy. Okay, underwriting. The underwriting is the same on both of these products, exactly the same. It is a point of sale underwriting. So our underwriting has changed a little bit from what we had on the previous wealth series of products, if you ever wrote any of those. Now it is still standard table 4 accept right? So if it's table 4 or better, we take it. If it's over table 4, it's a decline. What it is, as I mentioned, it's point of sale underwriting. So there's some pre-qualification questions. They're in the agent guide. They're also on the application. We're also creating a one-page piece that'll be out any time now, which will have the questions on it to make it easy for you when you're with your client and trying to pre-qualify them. But basically, they just have to answer no to everything. So on any of these questions, if they answer yes, they're not going to qualify, so you won't want to write the application. If you answer no to everything, they should qualify unless during the phone interview there's conflicting information on maybe a prescription check or an MIB or something, okay? So if they answer no to everything, you can move forward. If they answer yes to anything, then do not move forward. In those situations, are we going to do exams or fluid draws? The phone interview is at the point of sale, right? So after you pre-qualify them, complete the application, you as the agent or advisor initiate the phone call. They'll ask you a couple questions. They'll have you hand the phone to your client to do the interview. Interview is about 20 minutes. And they're going to basically just re-ask those questions that are on the application. At the end of the interview, if the case is under $250,000 in premium, they're going to get an approval or a decline. We are not going to order medical records or APSs in hardly any situations for this. Okay, so in almost every situation, unless there's conflicting information, they'll get an approval at the end of the interview or a decline. Okay, now if the case is $250,000 or over, it's the same thing, except the approval will be subject to an APS, and we at EquiTrust will order the medical records just to confirm everything. Okay, so under 250, no APS. 250 and over, we'll always get an APS. Then, of course, we do the real-time notifications of decisions. So send an email to you letting you know that it was approved. Obviously, you're going to get that notice during the phone interview, so you're going to know at that point anyway. Okay, that is the same underwriting on both these products. Talk a little bit about liquidity. Both of these products offer free withdrawals that I'll talk about a little bit. The secure product does have a graded return of premium, so the ability to get all their money back. Both of them have an accelerated death benefit, which is a huge selling point of the product that we'll get into more. Our growth product actually has zero cost loans, so ability to take out loans at no charge on it. So what you can see is the products are very liquid. Sometimes I think people look at life insurance and think, well, they'll never be able to touch that money. That's not the case with the EquiTrust single premium life products. They have lots of options to access funds if they need to. Okay, the living benefit rider, or the chronic illness rider, or the accelerated death benefit rider, goes by a lot of different names. With EquiTrust, it's the same on both of our products. Okay, so no matter which product you get, you have the same rider. With it, there is no cost. It's just automatically added to the policy at issue at no cost. Now, if they ever elect it, so if they ever have to use it, there's a one-time charge of just $250. Okay, and there's 3 different triggers that will allow them to accelerate that death benefit, to take the money out to use for that reason. The first trigger is terminal illness. Okay, so that'd be less than 12 months to live. If that's the case, and we just pay them out a lump sum of 95% of the death benefit, and that's paid tax-free. Okay, so their death benefit's $100,000. We pay them $95,000 to help cover the terminal illness. The second trigger is nursing care confinement, which would be 90 consecutive days in a nursing care facility. If they qualify under that, they have 2 options. They can either take 85% of the death benefit in a lump sum, or what they can do, and what most people do, is they can take 100% of the death benefit over 3 years. Okay, so if they choose the second option, it's just whatever the death benefit is at that time divided by 36 months. That's what we'll pay them every month to pay for their nursing care. If they pass away before it's all paid out, the remainder is just paid in a lump sum to the beneficiary. Okay, but they do have the option to take a lump sum, but if they do, there's a discount factor. So the company keeps 15%, and they only get 85% of it. The third trigger, and really I think the most popular one, I guess, the one people are looking for from a client perspective, is what we call chronic care, or others refer to as chronic illness. And that is just a loss of 2 of 6 activities of daily living for at least 90 days, and it's expected to be permanent. They do not need to be confined, right? So this could be home health care, assisted living, something like that. With the chronic care, they have the 2 options again, either 75% in a lump sum or once again, what most people are going to do is 100% of the death benefit, but over 5 years. Okay, so whatever the death benefit is divided by 60 months, we'll pay that to the owner each month to help pay for that home health care. Now, this is a indemnity plan, not a reimbursement plan, right? So they don't have to send receipts in or anything. We just need proof that they qualify. At that point, we're going to send them a check every month, and they can do what they want with it, right? They don't have to use it to pay for the home health care. Now, if they don't, that's probably going to become a tax issue for them. If they want to be tax-free, obviously they should be using it to pay for the need, the home health care. Once again, the same riders on both products, added at no charge, but a one-time fee of $250 if they elect it. I should mention, I don't know if we have anybody from California on here, but recently we did get that rider approved in California, so it is on both products there, which is a pretty big deal because there's not a lot of that in California. Okay, let's talk about the two products now and walk through a case study. The first one is the Secure SuiteLife. If any of you have written the Wealth Max bonus with EquiTrust in the past, this product will be similar to that. As I mentioned at the beginning, this one's really built on guarantees. So there's a lot of guarantees in it. I'd say it's for more of a senior client, kind of where I see the niche or the sweet spot is ages 60 to 85. Those are the clients that are mostly going to be interested, but we definitely have clients younger than that are interested. It goes down to age 45. Issue age is minimum is 45, and we get lots of cases on clients in their 50s on this. So, but I think the sweet spot is more the 60 to 85. Minimum premium is $10,000. The maximum is based on face amount, so $750,000. This is a guaranteed death benefit, as I mentioned. So it's a paid-up policy when they buy a no-lapse guarantee to age 121. It has guaranteed tabular cash values within it, so the cash values grow on the guaranteed side, which is a really nice feature. It has a 10-year surrender charge schedule, starting at 12%. It's an indexed product, so even with all the guarantees, there is a lot of growth potential within this product, and I'll show you that in a second on my case example. It has a premium bonus to help kickstart the policy a little bit, right? So it's a 5% premium bonus. What that means is the death benefit immediately is higher than the guarantee. So that's kind of nice too, and that they're starting out with above the guarantee on the death benefit side. Mentioned earlier, it has a graded return of premium guarantee. Okay, so what that means by graded is it starts out at 88% first year, and then at the end of 4 years, it's 100% return of premium. Okay, so at the end of 4 years, they know if they need to surrender for any reason, worst case scenario, they get all their money back. Okay, 4 years and 1 day. That's how long it takes. And that's what makes it so popular for the bank money is the return of premium and the flexibility with that. Allows them, the comfort to move the money from a bank account to a single premium life product. And in addition to the return of premium, it does allow for 5% penalty-free withdrawals, 1 a year each year. So there's liquidity that way also. I mentioned this is an index product. Here's the caps and rates, which are very attractive. It has a fixed account of 4.5. We just recently raised a point-to-point cap on this to 10%. By the way, these are S&P strategies. It has a 1-year monthly cap. That would be your monthly point-to-point with a monthly cap of 3%. It has a monthly average, which has no cap, has a participation rate of 100%. And then there's a 1-year point-to-point par account on the Dynamo index. That is our vol control index that we have on the annuity side. That's been very popular. It's a Goldman Sachs strategy. It's a multi-asset. I won't go into a lot of it now, but I'm happy to discuss it if anyone's interested. But with that strategy, it's 135% participation within that index with no cap and no spread. Based off these rates, you can see kind of what the illustrated rates are if you run illustrations with us, or obviously when IAMS runs the illustrations for you. So the max illustrated rate for this product is 6.09 based off that 10% cap, but obviously you can illustrate any percent under that. So if you want to run an illustration of 4, you can put that in the system, 4%, and run the illustration. And a lot of people do that. And here's the commission. If you're not aware, we do pay daily commission. So if a policy issues today, we will pay the commission the next business day. It pays 8% from 45 to 75. It's still at 7.5 from 76 to 80, and 5.5 from 81 to 85. One thing I didn't mention is kind of what the average. I mentioned kind of the sweet spot being 60 to 85. Kind of the average age we see for a client on this product is about 69 or 70, right in there. It's kind of the average age. Okay, let's go through a little case example, in a situation that we see a lot here for this type of product. We'll take Linda, age 55, got $50,000 in a CD earning 2%, so nice CD rate. Her goal with that money is to leave it to her 2 grandchildren when she passes away. Concern for health-related expenses during her lifetime, as she currently does not have adequate long-term care coverage. Options, we're going to give her 3 options. One is to leave the money in the CD at the 2% rate. The second would be to transfer it to a multi-year guarantee annuity at 3%. And the third, obviously, would be to purchase our Secure SuiteLife policy. So here's kind of what it looks like. The CD at 2%, keep in mind the CD obviously is going to be taxable, so we're using a 28% tax rate here. It'll be taxable each year. So you can see in 10 years that $50,000 is grown to $57,000, and in 20 years to a little over $67,000. Second one is the annuity. Now the annuity, as you know, grows tax deferred, but in most cases it's going to be taxable at death. And this is showing the death benefit comparison, so this is assuming they pass away and it's taxed at that point. So at 3% in 10 years, that annuity will have grown to $62,381, and at 20 years it would have grown to a bit over $79,000. Third option is the Secure SuiteLife. Now remember, that has a guaranteed immediate death benefit, so immediately the death benefit is $107,000 tax-free on it. Whether they pass away, 10 days later, 10 years later, 40 years later, worst case is $107,000 tax-free death benefit. But keep in mind, this is an index product. Once again, so I talked about the growth potential earlier. Based off the illustrated rate, you can see the death benefit immediately is 151, so way higher than the guarantee. 10 years later, it's come down a little bit, but it's still 145, and 20 years later, it's 174. So a lot of growth potential within the product above those guarantees. Now, my personal opinion is a client should be comfortable with the guarantees within the product, and the rest is just gravy, as they say. So. Great guarantees, but a lot of potential within it too. So if the goal is wealth transfer, obviously this chart, shows why it can make a lot of sense. As I mentioned too, the other benefit is the chronic illness benefits. So let's assume she doesn't pass away, but she needs to access it for chronic illness. Here's what it would look like. If she's terminally ill, she would have a guarantee of $100. Remember, she put in $50,000 to start with. So if she's terminally ill, the lump sum for terminal illness is $101,400 tax-free. If she goes in a nursing home, she can do the lump sum or she can do the monthly, and the monthly is guaranteed at $29.65 a month for 3 years. Obviously, that's very strong, and then the chronic illness, which does not require confinement, would be $17.79 a month for 5 years. So that $50,000 will guarantee almost $1,800 a month to pay for home health care. Now, keep in mind that is off the guaranteed death benefit of $107. As you saw in the previous slide, it's possible the death benefit could be a lot higher. And if it is, these chronic illness benefits are going to be a lot higher too. So this is kind of a worst case scenario, what we're showing here. Now, another thing we've done is kind of help you during the sales process and help the client understand is we've created a few supplements to the illustration that you can add when I'm running the illustrations, or you do, or we do. We have 2 of them that we've created for the Secure SuiteLife. The first one, as you see in front of you here, is about the guarantees on the product. So I talk about the key selling point of this product is the guarantees. So we created a supplement for the illustration that's the power of guarantees. You'll see guarantees on this piece 9 times, right? So we put it in here a lot. So it shows that the guaranteed return of premium after 4 years is $50,000. It shows what their guaranteed chronic illness benefits are. Those numbers I just showed you, $17.79 monthly. It shows it right here on this one page. Also, it shows the guaranteed death benefit of $107,000. So what this is trying to do is, as you guys know, illustrations can get a little messy and there's a lot of numbers and stuff. So this is just kind of a one-pager that you can really spell out the key guarantees to the client on one page. In addition to that, we wanted to show something showing something similar, but doing the non-guaranteed stuff. And so we wanted to pick a point in time in the future and show what the values could look like. So what we chose was their life expectancy. So the supplement I just showed you before this, that one automatically prints with the illustration. The one I'm showing you now that shows the life expectancy snapshot, that one does not. So when you run the illustration, you just have to request it. There's an area where you can request if you want this added or not. We've gotten a lot of great feedback on both of these, especially this one actually. And as I mentioned, this is a life expectancy one. So in this case, Linda, who's 55, her life expectancy is 87. So what this is just showing is the guaranteed values at 87. So starting from the right, you can see her death benefit, excuse me, the non-guaranteed values. So her death benefit at her life expectancy, based on the illustration, is $215,000. So over 4 times what her premium was. Based on that $215,000, her chronic illness benefit is $35.79 and nursing care is $59.65. If you remember from the previous slide, based on the guarantee, the nursing care was $29.65, right? So it's $3,000 higher based on the non-guaranteed, and the chronic was $17.79. So what's that, like $1,500 higher based on the non-guaranteed? So potential for a lot more than the guarantees. And then the cash value element too. The $50,000 at 87, her cash value is 165. So if she needs to access the money, to help pay for living expenses other than health-related things, she can do that too, as she has a lot of cash value built up in it at that point. So a couple supplements we've added to kind of help you during the process, explain the benefits to the client. Okay, that's a secure product. The other one is the EquiTrust SuiteLife. As I mentioned, this is, I guess, more of a younger type client. Issue ages on it are 45 to 80, kind of the sweet spot's 45 to 70, I'd say. Once you get above 70, there's not a lot of advantage to this over the secure product. Single premium, minimum of $25,000 premium, max is $750 face amount. This does have a 15-year surrender charge schedule. And as I mentioned at the beginning, this one does not have a guaranteed death benefit. Okay, so it's possible it could lapse down the road. However, what they're giving that up, and what they're getting in place of that is really high face amounts, and I'll show you in a minute. And because of the high face amounts, really high chronic illness benefits. Also has very strong and very competitive rates, actually the highest rates in the industry. Does not have the return of premium, but does have liquidity. It has 10% penalty-free withdrawals one time each year. It also has wash loans after year 10. So it's a 15-year surrender charge, but after year 10, they can take a loan out at no charge. Okay. Not only that, you can illustrate it. So if they want to just look at, because of the strong cash value growth within it, if they just want to look at what loans might look like in year 12 or 13, you can do that when you run the illustration and see. I mentioned the rates are the highest in the industry, and you see them there. 5% fixed account, 13% point-to-point cap. I don't know of any higher than that out there. It's possible there is someone, but very high cap. 1 year monthly average of 120% participation with no cap. We have a point-to-point par account on the S&P, so no cap with a 70% participation rate. And then our Dynamo strategy, once again, which is our Goldman Sachs strategy, 160% participation rate and no cap. There on the right, you see kind of what the illustrated rates are based off of those caps. Because this is more of what I would consider more of a longer term product, more of a younger client product, we do pay higher commission on it as well too. The street level commission on it's 11% from 45 to 75 and 99% from 76 to 80. So really strong commission. Now I mentioned really high face amounts. I want to show you just some samples so you can see kind of what they look like. Excuse me. So you can see this is based off a $100,000 premium, a 45-year-old that the face amount's over 5 times the premium, a 50-year-old is over 4 times the premium, a 55-year-old is over 3 times the premium, 60-year-old is still 2.5 times, then at 65 it still doubles, right? So I don't know of any simplified issue products in the industry that have face amounts this high. They're really high, and once again, because they're really high, that's what determines your chronic illness and your nursing care benefits. So you see the monthly benefits over there on the right based off those face amounts. So if a 55-year-old buys this with $100,000, their monthly benefit for home health care is $52.63, which I believe is about the average cost in Iowa for home health care currently. So, the $100,000 can cover that need for them down the road. And we do, just so you know, too, on our illustration system, you can back into a premium. So if in your state the average cost of nursing care is $9,000 a month, you can put in $9,000 a month for nursing care, and it will tell you how much premium it takes to get there, which is a nice feature. Okay, we talked about the supplements too. This one has the life expectancy snapshot as well. It does not have the guarantee snapshot because this one does not have the guaranteed death benefit. Okay, but you can see the life expectancy snapshot here. Once again, it's a 55-year-old client, so at age 87, her death benefit is $258 based off that $50,000. You can see the living benefits there, and then the cash surrender value is really high there. It's 5 times at that point, $246,000 in cash value because of the high caps and high growth potential within the product. So when you look at the growth product, I think there's kind of 4 things. Let me work from the top down. So a lot of accumulation potential with the 13% cap. As I mentioned, really high and attractive face amounts. The attractive face amounts result in strong living benefits to address that need, and it does have liquidity through 10% free withdrawals and wash loans. Just to kind of summarize everything before we open up for questions here, both products offer a point-of-sale underwriting, which means you get the decision on the phone while you're with the client. We have kind of featured product design now. With the secure product, once again, you're looking at more of the guarantees, return of premium bonus. With the growth product, higher face amounts, higher caps, less guarantees. And they both have the strong living benefit rider for terminal, nursing, or chronic care to help address that need if it has not been addressed at this point. Website, the only thing I want to mention about the website is to access it, you need to be appointed with us. So if you have some interest in this, I think Sandy maybe is going to put a poll up in a little bit, but if you have some interest in getting appointed, and I hope you do, I'd encourage you to get going on that so you have access to everything we have on our website. And this close is the financials a little bit with EquiTrust. We do have assets now of over $18 billion, so our assets have really grown a lot over the last 6 or 7 years. 93% investment grade portfolio. Our risk-based capital, which is a key thing, capital ratio is just under 400%, and solvency ratio is over 105. So really strong from a financial standpoint. We are B+ rated with AM Best. It's the #1 goal of the company to get that rating back to A-, and I think we're close. We keep on working on it. But I did want to point out this because I think if that ever becomes an issue, there is Wards 50. I don't know if anybody's heard of that or not, but EquiTrust was recognized as a member of Wards 50 the last 2 years, and it's actually a pretty big honor and something you can use with your clients if you need to. But basically what Wards 50 is they look at all the life and health insurance companies in the U.S., so over 700 of them. And what they do is they do a 5-year look back. So they go back over the previous 5 years and look at all this financial information. You can see at the bottom there the performance measurements, return on equity, return on assets, return on revenue, growth, and surplus. And then based off of all that review, they pick the top 50 carriers. And it's been quite an honor because 2 years in a row, EquiTrust has been picked as one of the top 50. And you can go to Ward's website if you have time sometime and look at it. It'll list the other 49 carriers, and most of them are very, very large carriers that everybody knows, and then EquiTrust is part of that. And there's a flyer on there you can print off, different things you can do to show your clients that. So I do want to point that out. I think it's a very reflective of the strong financial strength of EquiTrust. With that, that's all I have. So at this point, I'll pass it back to Sandy and see if we have questions.
Okay. Well, I appreciate it. I'm going to put out another poll question, and while we do that, we'll answer questions as well. So this poll question is just if you're interested in getting some additional information on contracting with EquiTrust, which I can't strongly suggest enough that you do. If you are interested in selling single premium life or even fixed or indexed annuities, EquiTrust is the carrier to get contracted with. Before we go to the questions, I also want to make sure that you don't decline or discount your client's health because you don't believe that they will be approved. You would be very surprised at what we're able to get approved. So if your clients had a heart attack, diabetes, insulin controlled, one occurrence of cancer, things like that, back, 10, 15, 20 years ago, that may have been a decline. It's not any longer. If your client's been declined by long-term care, that does not mean that they will be declined for life insurance. Long-term care is underwritten for morbidity. The single premium life is underwritten for mortality. So keep that in mind. Jason, we have a question from an agent. He says 50,000 turns into 155,000. Is that death benefit a paid-up policy?
That one was a growth product, so it's not a guaranteed death benefit. That's the initial face amount. I think you're talking about that, like that first slide I did. Mm-hmm. So in that case, it's not a paid-up policy because it's possible they would need to add to it down the road. It's very unlikely. But it's possible. But with the secure product, as you know, Sandy, that is a paid-up policy. So if they need a paid-up policy, we could run an illustration with the secure product. I don't know what the 50,000 offhand. I don't know what the 50,000 would get them at that age.
Sure. And so again, there's two different products. If you're looking specifically for growth, it's that growth suite. And if you want to do one single premium and have a completely paid up policy to age 121, the secure suite would be a great product to take a look at. Still has some great growth to it. Of course, all the great benefits that Jason had mentioned earlier. So if you have any questions, please give myself or Jason a call. Again, do not discount an agent or a client because you don't believe that they would be qualified underwriting wise. It's an immediate decision on the phone, and there's never exams or labs asked. Again, you would be surprised at what we are able to get approved. It doesn't mean that everything will get approved. However, we have a good success rate with EquiTrust. It doesn't look like we have any additional questions. So Jason, just want to say thank you so much for taking time out of your schedule. EquiTrust is a good friend of ours. You cannot get a better company when you're looking at fixed or indexed annuities or this great single premium life. Don't forget the bonus that they offer, up to $1,000 per app through September. Everyone else, thank you so much for your time. I hope you have a wonderful, safe weekend. I will send this recorded webinar out to everyone. Again, any additional questions, please let me know. Thank you all. Bye-bye.
Thank you.